The year 2025 has begun with growing concerns across the world. Headlines of slowing economies, collapsing markets, and rising unemployment are dominating the news. Analysts and policymakers are warning of a looming global recession, and this time, the effects are far-reaching. But beyond the statistics and political speeches, there is one group that will be among the most affected: migrants. Migrants form the backbone of many economies. They work in construction, healthcare, agriculture, technology, and countless other industries that keep nations running. Yet, when recession hits, migrants are often the first to face uncertainty, layoffs, and tightening rules. In this video, we explore what the global recession of 2025 means for migrants across the world. The seeds of this crisis were planted years before. Experts point to several factors converging at once: high inflation that continued from the early 2020s, debt crises in multiple countries, particularly in developing economies, energy market instability after years of geopolitical conflicts, technological disruptions that eliminated traditional jobs faster than economies could adapt, and finally, climate-related disasters, which damaged agriculture and infrastructure globally. By 2025, these pressures combined to slow global trade, push unemployment higher, and shake investor confidence. The International Monetary Fund, IMF, officially declared a synchronized downturn, meaning almost every region of the world was facing a slowdown at the same time. When a recession hits, governments and businesses immediately look for ways to cut costs. Unfortunately, migrants often face the hardest consequences: job losses. Migrant workers, especially those in temporary or lower-skilled jobs, are the first to be laid off. Construction, hospitality, and retail sectors shrink rapidly. Visa uncertainty. Many migrants are in countries on work visas that are tied to employment. Once they lose their job, they risk losing their legal status. Reduced remittances. Migrants send billions of dollars back to their home countries. In a recession, remittances fall, putting entire families and economies under strain. Discrimination and scapegoating. Sadly, history shows that during downturns, migrants are often unfairly blamed for job losses or economic troubles. The United States has long been the top destination for migrants. In this recession, the US faces massive layoffs in the tech sector, logistics, and service industries. H-1B visa holders and undocumented workers are at risk. Many tech migrants from India and Asia who once thrived in Silicon Valley are now facing uncertainty. Undocumented migrants in agriculture and construction are working fewer hours as demand slows. Policy debates in Washington are heating up, with some politicians calling for stricter immigration rules, while others argue that migrants are essential to keep the economy functioning. For migrants in the US, 2025 is a year of both economic hardship and political tension. Europe, too, is facing a dual challenge: recession and migration management. Countries like Germany, France, and the UK, long dependent on migrant labor, are tightening budgets. Refugees from conflict regions, such as Ukraine and the Middle East, face longer asylum processing times. Migrant workers in healthcare and elder care are still in demand, but governments are cutting back on new work permits. Rising far-right politics in some countries are using the recession as an excuse to push anti-immigrant policies. For migrants in Europe, opportunities are shrinking, and the social climate is becoming more hostile. The Middle East's Gulf countries, like Saudi Arabia, UAE, and Qatar, rely heavily on migrant workers, especially from South Asia. In times of economic boom, migrants fuel construction and services. But in a recession, construction projects are delayed or cancelled. Domestic workers and service industry migrants face pay cuts. Some Gulf countries may reduce new work visas as oil revenues fluctuate. However, the Gulf has a unique challenge. While local citizens enjoy government support, migrants often have no safety nets. When they lose jobs, they must return home almost immediately. While host countries struggle with recession, the impact is equally devastating for countries that send migrants abroad. Nations like India, Pakistan, Bangladesh, and the Philippines rely heavily on remittances. In 2025, as jobs shrink, remittances drop sharply. Families depending on money from abroad fall back into poverty. Governments face balance of payment crises. Social tensions rise as returnee migrants flood local job markets. Asia's story in this recession is about reverse migration, where workers are coming home instead of leaving for better opportunities. Both Canada and Australia have been immigrant-friendly nations, but recessions test their policies. Canada, with housing costs soaring and job market shrinking, the government is under pressure to slow down immigration. However, its aging population still requires skilled workers in healthcare and tech. Australia, student visas and temporary work visas face stricter requirements, as locals demand priority for jobs. Migrants, particularly international students, are finding it harder to manage rising costs with fewer job opportunities. Both countries are walking a fine line between keeping their economies open and addressing political backlash. While most headlines focus on the US or Europe, Latin America and Africa are deeply affected by the 2025 recession. In Africa, youth unemployment is skyrocketing, fueling more migration attempts toward Europe, despite harsher border controls. In Latin America, millions of Venezuelans and Central Americans continue migrating north, even as economic opportunities in the US shrink. South-South migration, where migrants move within developing regions, is also becoming more common as people seek any available work. These migrants face double challenges: economic struggles at home and hostility abroad. It's easy to paint migrants as victims of the recession, but there's another side to the story. Economists argue that migrants are actually part of the solution. They fill jobs that locals often refuse. They contribute taxes and social security systems. They bring innovation and cultural diversity that help societies adapt. If governments respond with smarter policies, like retraining migrants, offering pathways to permanent residency, and protecting their rights, migrants could help stabilize economies during the recession. The global recession of 2025 is reshaping migration patterns. Experts predict tighter borders. Many countries will reduce visa approvals. Regional migration. More migrants will move within their own regions rather than across continents. Rise of climate migration. As climate disasters worsen, more people will be forced to migrate regardless of economic conditions. Policy innovation. Some countries may experiment with flexible visas or short-term work permits. Resilience of migrants. Despite challenges, migrants will continue moving in search of safety and opportunity. The global recession of 2025 is not just an economic story, it is a human story. Migrants, who build homes, care for families, harvest food, and drive innovation, are among the hardest hit. Yet, their resilience will also shape the recovery. As we move forward, one question remains: will the world treat migrants as burdens, or will it recognize them as essential partners in rebuilding economies? The answer will define not just the future of migration, but the future of global society itself.